We're live. You can start.
Hi everyone. Assalamu alaikum. Thank you so much for joining us today. Today we are starting the second episode of the Investor Series. We are very glad to have a very versatile panel from all across. Most of them have invested already in Pakistan, and most of them you're very familiar with. Some of them have great interest in Pakistan, many deals in the pipeline. For the introduction and for the details, I would hand it over to the very versatile and dynamic Meenah Tariq from Karavan VC, who's also the moderator, to please introduce the panelists and also to start the conversation. Over to you, Meenah. Meenah. I guess Meenah is probably having some technical difficulties. Let's wait for Meenah to log in again. Yeah, over to you, Meenah.
So Meenah needs to
She's unmute her.
Welcome, Beau.
Hey, how is everyone?
Good.
Good. Sorry about the difficulties there.
Okay. Hi, everybody. Thank you so much for joining us today. I don't know what was going on 2 seconds ago because for some reason I got kicked out. I'm assuming Faisal has just kicked us off and maybe there was a short round of introductions. But I am just going to kind of hit the ground running. We have an hour and we have some fantastic panelists with us today. And I'm really excited to start to hear from them. So I'm just going to quickly go over who we have in the room. I'm not going to spend a lot of time on introductions. And we're going to get right to the meat. So we have in the room Beau from Patamar Capital. We have Shin from Shorooq Partners. We have Ali from Fatima and Gobi Ventures. We have Khaled from Nuwa Capital. We have Faisal from Lakson Venture Capital. And we have Khailee from 500 Startups. My name is Meenah Tariq, and I'm a partner at Karavan, which is a venture capital fund investing in Pakistan. So we're living in interesting times right now, and that's the nicest way I can describe what has been going on in the last, I think, 40 odd days. It's been an interesting time in terms of, how society has changed, how things we've done every single day have changed. And it's been really interesting for the startup ecosystem in Pakistan and for startups globally. And we've been talking to our portfolio companies, we've been talking to entrepreneurs across the country, and we've been trying to understand where they're at. And we've also been trying to hear from investors to see where they are at right now. And that's part of what is going to happen today. What I'm super excited about is, from what I understand, all the funds in the room right now, the majority of which are international funds, have either some interest in Pakistan or some allocation already as part of their current or future funds for Pakistan. So to kick us off, and just to set the context, if we could just go around the room and hear from everybody what your fund allocation is for Pakistan, what kind of ticket sizes you already consider or are considering, what are the stages at which you want to invest, and what are your fund deployment timelines. So just to set the context, whoever wants to go first. Or actually, should I just call for somebody? Maybe Faisal, you can start us off. You're not an international fund, but you can start us off. And just to set some ground rules, I'm going to give everybody about 2 minutes to answer every question. I'm very sorry, I have a lot of questions, so I'd like to get through as many of them as possible. Faisal, over to you.
Sure. I'll be quick on it. So I'm Faisal Aftab, managing partner of Lakson Venture Capital. We're a pre-Series A fund focused on technology investments in Pakistan. Our sweet spot is generally companies that are starting to show a network effect or a month-on-month revenue growth. And ticket sizes between 500,000 to 750,000 is where we like to come in, give companies a runway for about 24 to 36 months. And usually then we like to follow on if a company is doing well and then work with other investors to grow the company and scale it. In terms of the size of the fund, we're about a $10 million fund. It's actually a rupee-based fund. We're a locally licensed VC. So I'm going to stop measuring it in rupees since the devaluation keeps changing the size of the fund. But what matters is dry powder in Pakistan, purchasing power-wise, is still substantial. when you invest about close to 8 crores or 9 crores, it gives a significant chunk of momentum to companies.
And Faisal, are there particular verticals that you're looking at? And also, are you going to, or like right now, do you think you're going to be investing across 2020?
Sure. So yes, to answer your question, because we've only deployed about 20% of our fund, so we have lots of dry powder. As I've been speaking on other panels. I've been generally bearish on the overall macro scenario. So luckily, a lot of that filtered into our VC analysis. So in 2019, we generally didn't jump into any deals where we felt the valuations were not making sense in terms of multiples. Because there's a very scientific way in which we look at multiples, and when you look at comparables in India, Indonesia, Malaysia, generally we use discount rates based on what the equities markets are trading at, right? And so we felt the multiples were getting a little bit too exaggerated, and so this year we'll be investing in companies, very selective companies. Obviously, the most obvious ones are ed tech, health tech. We've already done an ed tech play, so we're looking for a health tech, and digital payments is where we'd like to focus as well. So anyone that's digitizing the economic activity segment, B2B plays in things like your FMCG and corner stores. So things like that we're very interested in.
Thank you. Thank you so much, Faisal. Shane?
Hello, everyone. Really excited to say hello again after my amazing time at the 0 to 1 Disrupt last year. It seems forever already. So my name is Shin. I'm a founding partner at Shorooq Partners, which is an early stage VC, actually in the Middle East, North Africa, and Turkey. So we focus anywhere from seed up to Series A. We try to lead all of our deals in software companies, fintech companies, and platform companies. Anywhere from the check size, minimum we want to put is the $250 to $2 million is really a sweet spot. For Pakistan, we are quite keen. We have actually just committed to one. We didn't disclose yet because we're still on the works, but we're quite excited with our first move into Pakistan. And
Awesome.
we're really looking for more opportunities with my friends here on the panel and with all the amazing entrepreneurs who are listening to this. So please reach out, and we're keen. We really try to be active with our companies because our principle is to be founders partners. So we don't do too many investments. We try to invest in about 6 to 8 a year out of 1,000 plus we see. So we want to be super active with any companies we invest in. Be that Pakistan, we want to help them expand outside of Pakistan, probably, be that the US or Europe or Asia or to the Middle East, North Africa, which is our core focus.
Mm-hmm. Awesome. And Shane, what is the size of the allocation that you have in mind for Pakistan right now, or how many deals do you expect to make in Pakistan in 2020, if any?
So in Pakistan, so we have done one now. It's really, so because we're a Middle East, North Africa focused fund, we don't have a clear, let's say, mandate for Pakistan. It's more about the quality of the company. So we can be flexible if we want to, but to be realistic and to give you a context, in our view, probably one a year in a good scenario. And the check size, again, we want to be following on as much as we can. So each check size, we want to put like, let's say, $1 million, $500,000 as a start, and build our positions over time.
Okay, great. Thank you. Thank you so much, Shane. Beau, do you want to go next?
Yeah, hi everyone. My name is Beau Seil. I run a firm called Patamar Capital. I'm based in Singapore. It's good to see a bunch of friendly faces here. So folks I talk with on a regular basis, Khailee, Faisal, Ali, it was good to see you as well. For us, we don't have a strict allocation to Pakistan. We're very similar in the way that Shane talked about this, is that we can be opportunistic in the market. A little bit of it depends on exactly how large our new fund is for us to then decide how much we can allocate to Pakistan. So as background, we tend to invest at the Series A level. We'll do follow-ons in the Series B. In the Series A in the past, that's ranged anywhere from, let's say, 1 to 5 million. Follow-ons, taking our pro rata and then potentially bringing in some of our LPs into co-invest vehicles. So from that perspective, we're looking at businesses that are trying to be disruptive in financial inclusion and financial services, or what we would consider to be tech-enabled distribution platforms that are operating in the real economy. So for us, we look at everything from education to healthcare. Really our lens is how do we invest in companies that are focused on serving the mass market in South and Southeast Asia. And in Pakistan, we see a tremendous amount of opportunity as the market continues to grow and develop.
Interesting. I don't know. I think I lost you right at the end, Beau. So I don't know if you're still online or if you guys can still hear me. But Beau, the last time we spoke, you told me that you were in the process of raising the fund, but you already had commitments and you could start deploying it. But for 2020, do you think you'll be deploying any funds in 2020, particularly in Pakistan? Are you still analyzing opportunities in Pakistan right now?
I think it's a good question. Right now, we're evaluating the whole universe of opportunities. We are primarily a Southeast Asia focused fund. So with that said, it comes down to just prioritization within our pipeline. So right now, I can tell you, in 2020, we would do X number of deals or place Y amount of capital. But we still are very bullish on the market.
Great. That's good to know. Thank you. Ali, do you want to go next?
So, hi everyone. My name's Ali Mukhtar. I'm from Lahore, managing Fatima Gobi Ventures. We have a unique setup where on one side we have a local conglomerate entity called Fatima Ventures, and then on the other side we have Gobi Partners, which has been active in China and Southeast Asia. So together we launched an early stage fund for Pakistan, investing into seed and Series A companies. So our check sizes would range from anywhere from $200,000 to about $2 million. A lot of our thesis is driven by pattern recognition across regions. So companies that are doing well in, let's say, Southeast Asia, companies that are doing well in the Middle East, other companies in Pakistan with high quality founders that could be global founders. And then we try to invest based on that thesis. But we also look at the ability of these companies to expand regionally. And by region, we think a lot of companies have the opportunity to go into MENA and as a first place, and then go also into Southeast Asia, where Gobi Partners can really help us expand with their network. So that's a quick summary of what we're doing.
Awesome, thank you. And again, do you foresee continuing to make investments over 2020, considering the crisis?
Yeah, we just committed. So from the Fatima Gobi Ventures Fund, we just made a second commitment. We'll be announcing it soon. And obviously our first investment is Airlift. So we see a lot of opportunity. We do think that Pakistan is in a unique place where all the funds right now are early and new funds. So they have, let's say, more than 80% of their allocations unallocated, whereas funds that have invested prior to this will have somewhat bigger challenges.
Yeah, absolutely. Thank you, Ali. Khaled, do you want to go next?
Hi everyone, it's great to see some familiar faces and reconnect with people. Just a little background on myself. My name is Khaled Talhouni. I'm a managing partner at Nuwa Capital. We're a recently formed VC. We just came together about 3 months ago. We're primarily based in Dubai, but we look to invest across the GCC, North Africa, East Africa, Pakistan, and Turkey. We look at investing from seed through Series B. We've not done anything in Pakistan yet, but I think it's one of the geographies that we're particularly interested in and we'd like to do a lot more in. We think it's an incredible opportunity right now, even in spite of COVID, to look at the market as it rapidly digitizes and goes online very quickly. We don't have a very specific allocation, but I think we're opportunistic on that front.
Yeah. Okay, and what is the general ticket size that you're considering for Pakistan, Khaled?
I think across the fund we do C through B, so that's ticket size of $250,000 up to $5 million, possibly as much as $7 million. I think in Pakistan we think from our somewhat limited view of the market, we think it's an interesting opportunity to play in the A stage. So really tickets of $2 to $3 million. So that's I think where we like to invest once we're up and running.
Great, thank you so much, Khaled. Khailee?
Hey, what's up, everyone? Yeah, good to see familiar faces. What's up, Beau? Thanks for the shout out. What's up, Faisal? And a lot of new faces as well. Happy to meet all of you. Well, for us, like we've cut a check into Pakistan last year into Dawai. So Furqan's the founder, and he's great. He's been really educating us and introducing us to folks. It's very early for us looking at Pakistan. I think historically 500 startups as a firm, like we're founded in 2010 and we've invested in 75 different countries around the world through various funds. So we have different funds focusing on different regions. So the check that was cut last year was out of the Southeast Asia Fund. And it's kind of like an opportunistic check for us as a firm to learn about Pakistan. So we're still actively looking at deals. Last week we made a commitment and we're in the process of closing an investment. So when that's kind of closed up, then maybe like when the deal's done, then maybe there'll be something to talk about there. But I'd say the way we're looking at Pakistan now is in learning mode. When I first became a VC many years ago in 2014, and we first started to take a crack at Indonesia and the rest of Southeast Asia, it was very interesting to see how each of the markets develop and the opportunities that develop with it. And in the same way, we're just going in there with a learner's mind as a student. We want to talk to founders, talk to other VCs, and really try to absorb as much as we can. And we're ready to invest in our learning. And hopefully we can have transferable learnings from our neighboring markets along the way. I do want to share one thing though that makes me quite happy to see that we've got a little forum like this with so many VCs. I see that in the early days of investing in Southeast Asia, it was like this as well, where a lot of the VCs would collaborate very closely. And then as the market started expanding and then more VCs came in, and I think some of them start expanding their fund size and it became a little bit less, maybe slightly more feeling like it's competitive, even though maybe it isn't really. So we lose this kind of intimacy. So enjoy it while it lasts, right now. No, I'm kidding. Like this, like, it's really
VC, right?
Yeah,
so for now,
China VCs as well, and they said the same thing. They used to be just this little WeChat groups of 12 people, and they did all the deals in China. And now like no one talks to anyone. You know what I mean? So, but hopefully it'll be different. I think Pakistan can be a center of collaboration as well for as long as we can.
Yeah, I mean, right now, Khailee, if you want to raise if you want to raise $5 million in Pakistan right now as a startup, you want to raise it from VCs in Pakistan, you probably have to get every single VC in Pakistan together on that deal for it to happen, right? There is that capital kind of liquidity crunch right now generally, but it's as it's getting better, as you guys and other international funds are coming in, there is still a bit of competition. Maybe we can talk about that later, but because of the deal flow. But yeah, you're absolutely right. I think we're really enjoying this kind of collaboration across the board with everybody. So thank you for saying that. So I'm going to start my next question with you, Khailee, because yeah, I have you here. What is keeping you up at night right now in this current crisis we're in? What is keeping you up in terms of your current portfolio? And what are the stresses, or where do you see the stress in the startup ecosystem globally right now?
Well, I don't think I've been having great sleep, like on my sleep tracker, I've been looking at how many hours I've been sleeping, being in a lockdown. Like last year I did 216 flights. So that's like one flight every 3 to 4 days. And like now I'm doing none, right? So I've got all this free time. I'm like exercising, I'm eating well. I've caught up, I have more Zoom calls than my founders than I ever have, So I was speaking to my wife, like we spend so much time with each other and so connected and present, and it's great. So I almost feel bad like bragging about how awesome my life is, in this kind of COVID season. So I don't
with the COVID-19.
Yeah, I know this is live on Facebook to millions of people through your channels, but hope we could hope you can take that in context, because at the same time, I mean, of course, a lot of folks are suffering, and then my wife and I, we spend our nights on charity, especially locally as well. But to your question about what really keeps me up at night in the context of what's on my mind, I think I think it's just like making sure that a lot of my founders, like the specific ones which represent like a larger portion of the net asset value, like they're getting the maximum amount of options in terms of funding, as well as ideas, and as well as energy and motivation. I mean, it's easy to get caught up in the collective emotional drama of it all. But I think the best thing we can do is to provide some calm, provide some uplifting ideas, and some enthusiasm around the opportunities that present themselves. So and for me, I'm super excited because every day the calls I have with a lot of my founders, they're like giving me these great ideas that we can cross-pollinate across the portfolio, and a lot of them have done spectacularly well despite everything that's going on. So I maybe the only thing that keeps me up at night is how excited I am. Like, this is a very, very exciting time.
Well, that's really good to know. Thank you. Faisal, do you want to go next? How is your portfolio doing in general, and what is keeping you up at night in terms of your portfolio, and where is the stress that you're seeing in the startup ecosystem?
Sure. So like Khailee, I mean, Netflix is keeping me up at night till late. I'm binge watching, which I didn't get a chance to do before, right? So it's actually been kind of nice, again, spending time with the family and getting to work from home and working as I choose, right? But in terms of the portfolio company, obviously the travel and transport sector, that's been the hardest hit. So one of the things that even last night, actually, I was on the phone till 2 a.m. with Faisal Aslam from bookme.pk, where we were analyzing, when do bus companies come back? Just scenarios, right? Because I'm trying to also acclimate myself to the local environment in Pakistan. Everything I read is either Europe or US centric, and it's the local environment, I think, is slightly different, where the approach has been somewhat different, and so it just depends now. So what are we debating? That do we need to extend our runway for an extended period of time? Because if I look at Boeing in terms of at least the airline sector, they're saying it's going to take 2 to 3 years for it to come back to the levels of 2019. Or do I basically, and again, we're primarily bus transport, right? So in that scenario, is the government going to open up intercity bus in the next 3 months, 4 months? So it's planning on runways that we're looking at. And then on the other portfolio companies like Mandi Express, which is fresh produce, the problem is different. We're in fact about to do, the initial commitment we did, we actually gave 50% of it. So the balance we're just about to give right now. It was on certain KPIs, and he's exceeded those KPIs given the current times. And so, again, making sure that he's scaling and he has enough funds. Same thing on Knowledge Platform, the EdTech side. We're having a similar issue where suddenly they've added 100,000 students in the last 2 months. So cloud costs went up. So we talked to Amazon for their Activate program, and then little things like that. So it's keeping me busy, and then obviously kids are keeping me super busy. So
a lot of scenario planning for your portfolio there.
Exactly. So I'll give the floor to someone else instead.
Sure. Beau, do you want to talk about this next? And particularly, if you could also talk about where you see the stress to be, and maybe also like where do you see opportunities right now, considering that we just heard from Khailee about how he was staying awake because of the excitement of it all.
Yeah, I mean, for us, where we're seeing opportunities are in some of these sectors where digital transformation has taken maybe longer and behavioral change has taken longer. So, if you start looking at things like digital health or telemedicine, people are actually being forced to use these things for the first time, which I think is going to shorten the adoption curve, which will have long-lasting impacts, I think, both on a positive basis and then just really changing the adoption curve. Some other sectors I think will be hit quite hard. I mean, Faisal already talked a little bit about tourism, transportation. But then on top of that, if you think of anything that's really related to nice to haves as opposed to must haves. So I think this is going to fundamentally change consumer behavior over the next few years as people have less disposable income, or they're quite a bit worried of how long this could go on, and they need to hold on to whatever money they have. So consumer behavior will likely change. I think that education could be positively impacted as people start to see, maybe I need to think differently about how I go about my education and how I access education. And then also how some employers may actually view digital education and some different skills training opportunities. So I think, with every challenge, there's opportunities. I think some of the bigger stresses that we're going to see is you're going to see a lot of companies that are not going to be able to get access to capital. And I think that the ones that are going to be hit the most hard are going to be the companies that were doing okay, but we're not, really knocking it out of the park or growing very quickly. I think that likely you're going to see venture firms backing the winners in their portfolio in even more of a concentrated way because they feel like there may not be capital from later stage firms going forward. You're likely going to see significant valuation compression. So funds that have been investing over the last few years will likely start to see some hits on their portfolio. And to be quite honest, I think that you need to be very careful as an entrepreneur to be looking at what venture firms potentially have interest in you, where they are in the life cycle of their fund, and how much dry powder they have, because they're likely not going to be able to raise another fund if they have not had a first close or a final close of their existing fund recently. They're not going to be able to go out and raise another fund for the next year or so. I'm just seeing LPs holding on to capital. We're seeing people actually walking away from LP commitments in funds all across the world, especially when you've got people who've been hit incredibly hard by some different things. If they had very aggressive portfolios in emerging markets and they took a big hit there. So, my worry is just you may see more consolidation. You may see less opportunity over a certain period of time. I think that you'll see a strong set of companies which will be able to raise capital, and almost in the way that Amazon came out of the late 90s crisis as one of the last people standing. You'll likely see that type of consolidation. But then also it's a very good time to be a very, very early stage company that has a great team and a great product, and they're in building mode, as opposed to kind of in this middle area where they've had a high burn rate. People can't figure out if they are disciplined to be able to use money in a wise way going forward. Maybe they weren't getting as much traction because they weren't as laser focused on figuring out who their champion customer was and really focusing on that. So,
Meenah, if you don't mind, I kind of break your format and just build on Beau's point, because I think it's great that you kind of lay that up for us to discuss. Because for the founders who are tuning in on the call as well, like it's just really weird that people feel they can't build money without venture capital. To me, that's like a very weird thing to think. It's almost as though we're so spoiled. Like bootstrapping and like self-funding has always been a thing. It's been around for about a couple of 10,000 years, probably. You know what I mean? It's like that. Like when I first became an entrepreneur, it was in 2008, and we bootstrapped for 2 years before raising seed. But by then, like we validated beyond, so I think that kind of like a reversion to original entrepreneurship is a real opportunity for like the real strong entrepreneurs to feel like, what, I can build this company and scale it up, and I don't need any money. I don't need any of these VCs on this panel. I'm going to do it the old school way. Right. And then like when sunshine comes again, like you'll be the hottest deal in town. So thanks both for that layup. I think that's important to think about.
Yeah, absolutely. Crunch is real, right? Like liquidity crunch was real last year, and it's only became more and more pronounced now that we have this crisis situation. So yeah, thank you for saying that, and I completely agree with you on what you said, Khailee. Ali, do you want to go next?
Sure. So the question was more on the portfolio, and then how is COVID impacting the liquidity in Pakistan? So
yeah, or like where are you seeing the stress, and maybe where are you seeing the opportunity as well?
So I'll talk about.
If I can just add another question, maybe, and like we can just take turns, and you can start by answering that first. Is also when we think as VCs about investing during 2020, during this crisis phase, right? A lot of the startups that are raising right now are doing so out of desperation to stay alive, right? And so generally VC money is growth money. You give it to a startup for it to really be able to take off, versus anybody who writes checks maybe this year is probably, or at least right now in this situation, is going to be writing a check to help somebody just burn that money to survive over the next few months. Now, I understand doing that for a portfolio company as a distressed fund, but what is the upside when you think about it, when you write a new check to a new company in this situation today?
Okay. So from a liquidity standpoint, so I think while we're reading about liquidity crunch in, let's say, different markets, US, China, India, Southeast Asia, you have to think that these were very developed markets where, to begin with, there was large pools of capital available that's now not going to be allocated, right? So Pakistan is not in that cycle. Where a new growing ecosystem where most of the funds are not deployed. Most of the allocations are still there. Most of the funds, I think, will continue to invest. But what's really important for Pakistan right now is the timing, because late stage capital is not available in Pakistan at the moment. So beyond Series A, Series B funds or Series C funds do not exist in Pakistan and will come eventually once there's enough deal flow to justify companies that we're backing now to get to that stage. But so now we have to rely on, let's say, foreign funds that have been opportunistically looking at Pakistan to come in. But since they're right now worried about their own markets, that extra step is more difficult for founders. But when we look at, let's say, the GFC crisis in 08, so funding dropped maybe 40-50%, and then it took about 2 years to come back to their normal level. So that timing that I talk about is very important in the sense that companies that are raising now need to at least plan longer runways. So when there's an uptick in that cycle and funds are now being active again, they're timing their next round of funding in most cases around that cycle turning back. But in terms of opportunity, again, if you look at the same data, funds that were deploying through that crisis period saw that their step up in valuations when the market started to rise again was much better, and then most of these funds outperformed. As an example, Andreessen Horowitz in the US, I think, launched their first fund in 08. So there's a lot of learning around this time that you can really capitalize on. To your question of startups raising in this time period, yes, there are definitely different scenarios. Some have definitely seen cyclical advantages of COVID. So they need to quickly raise money again, and that's where I think most investor interest is also coming in. So it's not purely still for growth. Other companies, I think, how we look at it, are short-term, have short-term negative effects, but structurally in the long term, we don't see those verticals disappearing, right? And those are still, some of them are very important verticals that will continue to exist. So if you can raise now, or if you can survive, like Beau said, there will be a lot of consolidation, which will then lead you to become market winners in that particular country, right? So it really, survival is key at this stage. Lastly, I think what's very important in a crisis is, as various companies, most companies are not hiring at this stage, right? So that, I don't know if there's evidence behind it, but one would imagine that pushes people to choose entrepreneurship as a career. So you'll see a lot more companies coming in, a lot more founders that will struggle through, but the end result will be incredible. So that's some of the observations.
Yeah, I think you're right when you say, we haven't really, we weren't really part of that cycle. I think to what Khailee also said, where he said maybe it's time to do it the old-fashioned way. It hasn't become the old-fashioned way in Pakistan right now. It is for the most part still the primary way to try and survive and do your own thing for 2 years, because essentially we've never really had a lot of liquidity in the market to start with. We hadn't gotten to that point. So maybe we, like you said, we're still we're still okay in that our founders are still very used to bootstrapping and very used to, literally being on the ground without a lot of money. Khaled, do you want to go next?
I'm on the right panel then, like I'm spending time in the right market then.
Yeah, we have very, very, very street smart entrepreneurs in general. Khaled?
Yeah, I think just broad comments, like just reacting to what people are saying. I think it's, like it's a really interesting time to be investing and looking at the kind of the tech sector in general in emerging markets broadly. I think the first thing is, you've seen like enough digital transformation in the past couple of months, more than you've seen in the past few years across our markets. And those are in the obvious sectors, right? Like e-commerce, the sectors that have benefited at least, like telemedicine, telehealth, e-commerce, e-groceries, e-pharmacies, all of that stuff. And then you have like mobility taking like a massive hit. So that much is clear. I think what's hard to kind of understand and what the real opportunity is thinking about what are the derivatives of these movements quickly. So what does it mean that, you have 80% of the population in certain markets buying their groceries online from maybe 5% like 3 months ago, and then what are the derivatives of that around the supply chain that are interesting to invest in, for example. So it might not just be these platforms that are where consumers are flocking, but like what feeds these platforms, what enables these platforms. So I think that's kind of like the really interesting thing or opportunities to invest in. Liquidity wise, I mean, it's still early to kind of really tell. I'm tempted to say, like across the spectrum, it's clear that there's less capital in the market already. I can say that, with confidence in like MENA and East Africa and Turkey to some degree. And I think Pakistan, because it's on an upswing in terms of its ecosystem, there's actually more capital than there was like a year ago, in theory. At least that's what I'm seeing from a distance. So I think it's a good time to be investing in Pakistan. I think the other thing worth thinking about is the fact that a lot of the most interesting companies of the past decade really were born, in the last crisis, as mentioned here. And I think you can see that, a similar trend will emerge out of this kind of economic dislocation again. So the question is, how do we, as investors, identify them, and how do entrepreneurs build on those opportunities and make sure that the entrepreneur where we're kind of pushing in the right direction. So that's kind of like just a broad view, just reacting to what everyone else is saying.
Yeah, I absolutely agree. I think what we're seeing right now is we're seeing even those startups that are doing well, right, that have uptake because of the crisis, for example, a lot of e-commerce players. What this has done is really sorted out who had the potential to solve for scale in a very quick amount of time, right? So if you had 40 orders per day before and now you have 500 orders a day, are you as a startup even able to design processes and design systems that are able to, and you're able to fulfill the demand that you're now seeing? So that has also started to really, like, very interestingly separate, the startups that have the potential to be the winners in the future, at least. So you're absolutely right there. Shane.
Yes. So a lot of good points here. So let me give you quick perspectives because I'll try to offer different ones or augment the ones already discussed. So in our view, if you have a dry powder, so we have tens of millions of dry powder now. So we're actually quite blessed to be in a situation. So we're actively looking for investments, actually across our geographies and also with new markets like Pakistan. So in terms of finding companies, I actually believe there is a capital in our regions like the Middle East, Pakistan. We never had enough growth capital. We never actually had enough capital across all stages. So, but we say that we see less capital, but I think we see less capital for the companies that were buying customers or the companies that actually had unhealthy unit economics. So this is the time, I think some investors, my peers have mentioned here, it is really a good time to focus on the core unit economics, the retention rate of the customers, the recurring revenue. Otherwise, if you're just buying customers to build the top line, frankly, right now is not good time to raise capital. And the investors here in the emerging markets, we're also going to learn that those investments have not done well, and it's going to be more difficult to raise capital for such a business model. So I think it's a good wake-up call. And actually, it's a lesson that all of us that we need to learn, and that we should have learned, and hopefully we are learning as we speak. So that's a super important. So it's just a good reminder to be core to the healthy business model. Second, we talked about the stress point here is how can we strive, how can we thrive from this crisis, right? Not only survive, we really want to be better after this, not only from the startup, but also as an investor. So that's why the best investors were always thinking about it. And I know Ali mentioned the talent. So we actually believe that this is a great time to poach the talents, the A+ talents that normally we cannot poach as a startup, just because the A+ guys, sometimes they are being, frankly, their salaries is too high. Their overall comps is just too high, but now the opportunity cost of those A+ talents has substantially decreased, not because of startups pays higher, it's just that their main salary jobs is getting reduced substantially. So right now, if you actually can approach those talents, you are going to emerge way stronger. And the best founders already are heavily working on that behind the scenes, and you're gonna see through that, right? And lastly, for countries like Pakistan and the Middle East, we're really along the same journey. We don't have a growth stage, right? That's really the fact. Unless like China, India, US, we don't have a growth stage. So we cannot bank on multi-billion-dollar acquisitions at Series B and C just because you're growing the top line. So what that implies is that you need to be able to show that you can be profitable. You don't have to be profitable because a lot of investors are mature enough to understand that, but you need to show a path to be profitable. Otherwise, you might be doing quite well until a Series A and after Series A, but at the Series B, where the reality starts to kick in, that you are not valued $100 million. If you look at your revenue, or if you look at your even the gross margin perspective, you're only at 100 million, you're only at $1 million, but you cannot be commanding 100 million. And we don't have guys like Facebook and Google to value at 100 billion. So it's really like you need to think from the journey. Today you raise a strong seed. What can you get to a strong Series A? And that's only a beginning of your long-term journey. So again, going back to the healthy fundamentals that we all talked about and emphasized about, I think is key.
Yeah, thank you so much for saying that, because I think we also had a lot of questions in the chat room around the paths to profitability versus burn businesses and bubbles. We've been talking a lot about bubbles in general, I think, in a lot of articles over the last 6 months. So thank you for saying that. I also really loved the opportunity that you identified for the room just now, where, yeah, you're absolutely right. A lot of people are losing their jobs, which is terrible, but that also means some really great talent is now in the resource pool that is accessible to startups that were in the past unable to match their super high salaries. And that's an opportunity in its own self, which is really great. So one other question that we've been having in the chat room, and I'm going to start with you, Shane, is around your scouting process, or I'm going to rephrase it a little bit. In this current scenario, what has a startup got to do to set themselves up to be able to fundraise from you particularly?
Yes, there's always a great question. So I'm sure all the VCs here go through the same process. So we get about 15 to 20 companies a week that we save their pitch deck. Okay, so if we include the companies that we cannot just even save the pitch deck because they're really outside of our mandate, or like just a very too apart, even from the visible standpoint, there are a lot. Right, and out of the 15 to 20 a week, we really try our best to talk to all of them, at least for 20 to 30 minutes. We call it introductory call. And now your question is, how can we get to that stage? So once you're on that, let's say, pipeline, you really, let's say, have a process, and that might result in no, or that might result in yes. But I think a lot of founders are always the question, how can we get to that stage? right? And in terms of specifics, right, the best way is always the warm referral from my colleagues here, that some of them I know very well, some of them I do not know. But even if I do not know them, if the warm referral comes from any person, it can be the VCs, it can be the founders that we have invested, it can be the founders that we have passed on. You know, we really do prioritize and look at that, especially in depth. And you might be wondering, how can we even get to the warm referral, right? And frankly, my response is simple. Look, in my view, the best VCs, we try to be visible. We try to be accessible to the founders. So like, yes, these days we don't have as many conferences to be there. So it might be a bit more difficult, but like we try to be active in these sessions. We have a team, we have more than 50 founders in our portfolio of 23 companies now. So there are ways, if you're disciplined, to get to the founders. And in our view, we're already starting our DD. By the way, you reach out to us, because if you're a CEO and a founder, you should have a discipline, and also you need to be salesy enough to build your business, which means you need to get to in front of the people you want to get to. You know, and frankly, VCs are the same. We're not any better. We're also try our best of the best to get in front of the LPs, right? Shorooq is a startup now. We're only around 3 years and a half. So I feel the pain that the founders go through. I really do, in terms of scalability, even the cost and etc. But to really have the best look by the VCs is you have to get a warm referral. And now to get to the referral, like there are many ways. It's not about just a cold email, cold LinkedIn, because we do get a lot of that. And frankly, those, especially cold LinkedIn messages, is especially tough just to deal with. But cold emails, we, at least Shorooq, we do look at every single one of them. Like if we didn't respond to you, we do owe you an apology, because that's not who we are. It's not how we work with. So like we do respond, but to get prioritized, you really have to get a warm referral.
Absolutely. Thank you, Shane. Faisal, do you want to go next?
Sure. I'm going to first call out Ali Samir Usman for making fun of my mic. He's calling me Larry King. I got this because of the last session with Jahara, I spoke so lightly, so hopefully this is loud enough for everyone. You know, in terms of reaching out to us, you know, we are a little bit guilty, just like what Shane said. Reaching out to VCs it's not easy, because there's so much, we get inundated with so much between WhatsApp and all the mediums out there, right? And we generally have a small team because of the size of our fund. So I'm guilty of not responding regularly to companies, but we do scan them all. And we're trying to set up a team that we, you know, at least get back to everyone and let them know if we're not on the right portfolio fit. In terms of, you know, just the overall space, kind of what Shane was saying, look, it's very important in Pakistan. I'll slightly digress here, because it's very important to see the opportunity in Pakistan. My fellow panelists here today, I think many of them are looking at Pakistan, and I call Pakistan one of the most undervalued assets on the planet, just primarily because of perception. We're the 5th most populous country in the world. And in terms of technology adoption, we were lagging primarily just because 3G and 4G didn't launch in Pakistan till 2015 and 16. So the opportunity probably is the same as what everybody else saw in Indonesia and India. It's just that the critical mass of active users were just not there because of a regulatory policy, right? So we're sitting at about 70 million plus smartphone users today in this country, and it's coming online very rapidly. And I think one thing COVID, this entire lockdown period, has done is that user growth on that side is going to continue to accelerate, and more people are being forced online. So I still think the valuations in Pakistan, I think, you know, and this I'll say on the founder side as well, they unfairly look at India on a dollar-to-dollar basis when it should be linked more to. Sorry, my phone was ringing. It should be linked more towards the network effect component, right? So money finds Pakistan or countries like Pakistan only when there's value here, right? And founders here sometimes get frustrated that, hey, why aren't we getting those billion-dollar valuations? It's a process. You have to first, as Shane was saying, you have to raise that, you know, early round. You have to first build value. So you have to kind of differentiate between just simply, you know, it's a socialism and capitalism kind of, you know, debate, where I see a lot of frustration in founders where they're saying, how do we raise money? Nobody's willing to fund us. Look, if you have a good idea people are going to fund you, and you're building value, right? So that's really what it comes down to. But it's not. This isn't like impact investing. I mean, some funds could be impact investing, and you should approach those funds. But at least I can speak for my fund. I have to be judicious in how I deploy capital because we're raising money from other people to invest and make money, right? And most of those people work very, very hard to earn that money, and basically this is their savings in a way, right? So
Yeah.
just the overall culture in Pakistan, I think it's evolving and it'll continue to evolve. From a fund side, I think more capital will just come. I agree with what the rest of the panelists were saying in terms of liquidity crunch. I mean, again, if you look at the equities markets around the world, there's so much value there that new funds are not going to be able to raise money today because investors out there are just basically going to look for value where it is in traditional markets, right? And VC is a very risky asset class. But that doesn't mean that after every bear market, you have basically a gigantic bubble that comes up again, right? And with what's happening with the Federal Reserve and Reserve central banks printing all this money, we will have a massive bubble again, similar to the one that we had in 2000 and the one we had in this prior to this current downturn. So, companies should just last it out. Sorry, I went on a bit of a sermon there, but it was all the various comments that I was gathering from different panels.
That's all right. I give you 2 extra minutes, Faisal. Just as a favor, I give you 2 extra minutes to do that. But thank you.
Sure.
Thank you. Khailee, over to you, but also if you can answer an additional question, which is, you've done a lot of early stage investments with 500 startups. Do you think that strategy can be replicated in Pakistan, considering that there's, we've been talking about a liquidity crunch towards Series B, but there's actually also a liquidity crunch for very early stage startups in Pakistan?
Yeah, that's this great question. Like, I love to cut 100 checks in Pakistan in a year. Like, I love to do that. I mean, that's what we did for Southeast Asia. When we hit Middle East in 18 months, we did 140 investments. And, these funds, like, they have a pretty reliable returns profile for LPs as well. The math kind of plays out. However, for other markets where we experimented with this, like Korea, we didn't do the same thing because we didn't think that the South Korean market would absorb like 100 seed checks in a year, So the market's got to have like specific conditions. And so for Pakistan, I don't know yet what they are. I'm still at such an early phase of figuring it out. But and also trying to figure out like the relationship between Pakistan and the Middle East and North African market, like will expansion be in that direction, or is it really to Southeast Asia? I think the India and Southeast Asia route is like kind of like being, like it kind of potentially could be a thing. But like where does Pakistan flow into in and of itself? I don't know enough yet. So I think I'm at a learning phase, and so we're not ready to kind of go big in that way. But hopefully, maybe 20 checks a year is enough for it to really light up, right? So we'll see.
Yeah, and how does a startup, set themselves up in this current situation to get funded by you?
Well, I've replied every single question in the Q&A so far, and I've popped in an email address that you can email. I think awesome. To the earlier points of the other panelists, I think all VCs, and I'll tell you myself especially, I've got 21,000 unread emails, 8,000 unread WhatsApps. Like, it's just, I mean, that area of my life is not optimal. Like, I'll be first to say it.
I can understand.
Yeah, and then also the my kind of like ability to cope with it is also dismal at best, right? So then I'm struggling, man. Like, I don't know what the right answer is. I think what Shane mentioned was that a warm referral or something. I think that's cool. Like, I like a warm referral for somebody I trust. But I don't know. Like, maybe they can go to you, Meenah, and then you can tell me. All right, we'll do some deals together. Maybe
that's the best answer.
Group of panelists.
I think
create a WhatsApp group for us to
drop off in a couple of minutes. So I'm just very quickly going to go to Khaled, so we can hear from him before we let him drop off. Khaled.
Yeah. No, I think just to kind of like wrap up, I think it's like a really just go back on one point to add to, like, it's one of the operational things that VCs need to be disrupted in is being able to kind of reach pipeline effectively, and to be able to kind of bridge that gap between supply and demand and capital, because we're just inundated with requests and applications and pitch decks, and it's so hard to kind of just stay on top of it. And we just kind of revert to the solicited email as the easiest way to go to the top of the pile. But But there must be a better way to kind of do that, and we keep thinking about like how can we innovate on that model? Because otherwise, as much as we try to kind of respond to everyone quickly, it's just not possible. So I think it's one of those things that I think we as a business need to kind of like figure out. But yeah.
Thank you so much, Khaled.
Thank you.
Beau, I know you've been visiting Pakistan and you've been meeting a lot of people here and exploring the pipeline. Is Beau still here?
Yeah, can you hear me?
Yeah, we can hear you now.
Okay. Sorry, I missed your question.
So how does it differentiate itself to be able to get funded by you?
Yeah, I mean, I think one of the things I would let entrepreneurs know is spend some time if you're going after venture firms, make sure that you do fit within what they're looking for. And I know that that's sometimes not the easiest thing to say because some firms aren't very clear on exactly what their investment strategy is. But I would take some time to look at their portfolio and just see where they've actually invested in the past and what type of sectors, what types of models. If your company is kind of in that sweet spot in another market, if you're looking at foreign firms, if you're looking at firms that already have investments in Pakistan, probably don't try and raise money from the firms that have invested in companies that look just like yours, because it's highly unlikely that they'll invest in a competitor of something that they're already vested in. So, for us, we tend to focus on the mass market, low and middle income communities. So, if you were to come and talk to us about a company that was focused on, doing high-end fashion for, the upper class in Pakistan, you probably would get a very quick no from us. And I would ask, if you actually looked at our website at all. So, do your homework before you reach out to venture firms. I think if you want to get the quickest no, without even anybody like wanting to talk to you ever again, it's if you haven't actually, taken some time to look at what they invest into. And you start lobbing emails out to everybody like it's just like a chain email to see who bites, because you don't know if that other firm has knows you don't know if I know Faisal or not, and I'll say to Faisal, hey, have you heard of this company? And they're like, yeah, I've heard of those guys, and like I think they're not very thoughtful about how they try and interact with people. So like I said, it's all an interesting game that I don't actually expect people in markets that are, brand new on the venture scene for people to know. I mean, we tend to get to know entrepreneurs for quite a long time before we invest. We recognize that, Pakistan, you don't have an incredibly robust ecosystem when it comes to, people that entrepreneurs can talk with yet as mentors. So, I was actually, I'll give you one example quickly. I met a Bangladeshi entrepreneur about a month and a half ago. And the guy just figured out he was just dogged, and he figured out exactly how to make it happen. And he had no playbook. Nobody told him what to do, but he was just not shy about anything. And he was thoughtful about trying to figure out how he could add value, or at least add a really interesting, set of conversations or information that a venture firm wouldn't have. So if you reach out to people, say, hey, we're raising money, but I also would like to tell you about all the different things we're seeing on retail in Pakistan, or some of the trends that we're seeing around logistics that we think people are missing. If you can position your intro and the initial conversation you're going to have with a venture firm, because it's not like selling them a used car, they're not going to just buy it right then. But if you can add value for them in your conversation, you have a much higher probability of having an interesting chat with folks.
Awesome. Thank you so much, Beau. Thank you so much. Ali, do you want to take that question and also add any last thoughts?
Sure. I think a lot has already been said in terms of referrals, in terms of how to approach investors, how to have all of that. I think one of the things that's unique right now in Pakistan is early stage ecosystems are definitely the time and opportunity to build relationships. Because 60% of VCs in Pakistan are on this panel at the moment. We are available we're trying to at the same time develop the ecosystem. So we are actively engaged in all the events that are happening, all the panels that are happening, mentorship sessions, connecting foreign VCs to Pakistan. So all of that is happening right now. And then the early relationships that you make will evolve as the ecosystem evolves. So this really is a great time to build those relationships, definitely.
Absolutely. Thank you. Khailee, any last thoughts?
No, I just really appreciate that we get this little time together, even though it's like quite short, you know. And I'm just so excited about all the entrepreneurs who I've spoken to in the past couple of weeks and months, and all the VCs that we've been having jams on. I think Pakistan is just going to be one of these huge markets that will set the stage for the rest of the world. So and then today is a moment in history, you know. So I really appreciate all of you inviting me here, especially Faisal, who brought me into this panel in the first place. Thank you so much, Faisal.
One thing I'd also like to add is ecosystems, you know, really, you have a small ecosystem that develops into a mega ecosystem, and it's just a matter of time. It takes 2 or 3 success stories before capital starts flying in, and then definitely when we're looking at different ecosystems, there are many examples. So I think Pakistan has now all the ingredients, and inshallah very soon we'll see this to be one of the hottest ecosystems there.
Absolutely, absolutely. Thank you. Shane, any last thoughts or any advice for startups who are listening in?
Yes, I personally am quite excited and really honored to get to know each one of you on a personal level. Really echo the excitement that the Pakistan, you guys have the critical mass, you guys actually have the talents, and also the amazing work ethic, which not frankly everywhere in the world sometimes shares. So that the let's say mix of ingredients will make Pakistan so unique. Just wanted to offer a quick color that what we shared about the code email, and when the Beau mentioned, because I really resonate. Please do take some time to actually articulating the code email. If you're reaching out in the code email, I think it's so easy. And also, again, the VCs, we should take the blame, because I'm sure we do the same for our own AOPs. It's so easy to create a template, just send it out. And you might actually have one or two customizations, but we can see through that. Right? Like if you're really curious to get to know the VC as a friend, because we're humans, right? We know that you're looking for capital, but we're all humans and we want to be friends with you. At least I'm sure the people here in this panel, that's really our approach. And if you are curious to get to know them as friends, you should spend time on it, right? It's not only about the capital. And that's why sometimes you see that like a US entrepreneur might be wondering, why did this VC invest in that company, although I'm so much better? And you might actually be so much better. But the personal relationship you didn't build with the VC can really be the strong reason for that. And at the end, we're investing in the people, and that personal connection is so key. So really, again, excited to be get to know you, and really, I'd love to find a way to share our contact with all of the participants here. And I would love to get to know you.
Sure. Shane, I think you can put your contact information in the, you can put it as an answer in the question answers, or you can put it in the chat, but we can also share it after the session, I think, with the people who are registered or people who are interested. Thank you so much. Beau, any last thoughts, any advice?
Yeah, I mean, I think, you know, some of the advice that was given earlier, you know, Faisal's advice on just talking a little bit about valuation and comparing it to some of these other markets. I mean, obviously, we're going to see valuations compress all across the region. So, you know, just one thing I would say is try and figure out who the partners are that you believe in and the right size capital in order to take you there and not be in the valuation chasing, especially now, because I think that the amount of risk that a number of firms are going to be willing to take, you know, if you go out with really aggressive valuation expectations as opposed to just trying to find the right partners, you know, you could get yourself in a position where people just are automatically turned off. And, you know, I think that great companies, you know, understand that. I think good entrepreneurs understand that. And I know that that can kind of sound at times like a self-serving statement, especially from an investor saying that. But I think one of the challenges that I do see for Pakistan coming up is, we were starting to see quite a few people actually getting very excited about the market who had not been excited before. And a lot of the growth stage capital, I think, is going to, really stay concentrated for the foreseeable future in some of those more developed markets, just because, if you think of LPs, investors globally that are putting money into venture funds, it's going to take some very, I would say, risk tolerant. And even though the risk may be misperceived in Pakistan, there is a story there, which is just a little bit more challenging for the global investor community. And so really taking also some of the other panelists' advice, which is, make sure you use your capital wisely to always create value at this current time, because there is a great market in Pakistan. It is not very penetrable by outside companies that would think of going into Pakistan. And so you as entrepreneurs actually have a great opportunity with a large market to build some fascinating companies. And now is a great time to be building, but just make sure that you always use money to create value. And right now, just prepare that it may be quite a while longer before the large slugs of capital start coming in. Because if you were to listen to some of the stories of how the Southeast Asian ecosystem developed, and Khailee can talk a lot about that as well. Indonesia was kind of going along for a long time, and then there was a big funding round, which was, in my recollection, it was Tokopedia raised 100 million from Sequoia, and then the whole thing changed overnight. So, in the words of some people, it's like things move slowly until they don't, but it's hard to predict when that white swan moment will happen for Pakistan. And so just, it doesn't always happen in a linear fashion. And I'm very bullish on Pakistan as a market, great entrepreneurs. And the other thing too is, don't be ashamed as an entrepreneur, if you haven't started a company yet, of going to work inside another company that's decently capitalized and you think that you can help drive value and growth there. Because there's something about being your own entrepreneur, but there's also something about being a part of great teams, adding value, and building some amazing companies in Pakistan.
Yeah, absolutely, Beau. Thank you so much. And I completely agree with you there. I think Pakistan right now is a study. When you talk about valuations, it's a study in contrast, actually. So you have some people who, like Faisal has said, are benchmarking against, for example, maybe US companies or even Indian companies, and coming up with like super high valuations, versus there's this, the other side of the spectrum, where there's a lack of still fundraising, knowledge, or investment education. And so we see some pretty crazy stuff still happening. And like you said, it's the growth trajectory, right? And these things are going to get better, where our intermediaries, a lot of them, such as the National Incubation Center, who is our host today, Nest.io, the NICs, Invest to Innovate, all of these intermediaries are trying to solve for that, which is fantastic. So I absolutely agree with you there. Thank you so much. Faisal, last thoughts and any advice for startup founders who are tuned in?
Sure. I think the rest of the panelists have captured a lot of it. I'll just share my sentiment. A quick piece of advice for startups. If you, or especially those willing to, thinking of entering entrepreneurship at this stage, a down market is always a good time to start something new, in terms, especially at the global macro scale, right? So, think heavily before you just jump into something. Try to solve a problem, a real problem that's for the local market. It's not, simply just jumping into it because it's a fad or everybody else is doing it, and then getting frustrated because you're not raising money is not the right approach, right? So use this time to educate yourself, especially financial education. At the end of the day, you're going to be managing other people's, cash flows. You're going to be taking other people's money, and cash flow management is an important skill. Lots of courses out there. Go on Khan Academy, all this stuff. Learn things about, in this downtime, basically on how to manage cash and prepare yourself. Basically, this is the preparation phase, and capital will eventually flow through. I mean, I'm personally extremely bullish on Pakistan, just because we have a massively undocumented economy in this country. And at some stage, given where the world is heading today with digital payments and just overall digitization by definition is traceability. So we will probably as an economy leapfrog in this decade and grow at a very rapid pace. It's not easy to predict or time anything. So the important thing is to understand that don't be depressed from the numbers in the last 30 years. A lot of those numbers were coming on our documented economy, right? Like in terms of our macro indicators, we just look bad because only 300 billion of our economy with 225 million people is documented. And so capital will come once we improve that documentation component. And we've never had this opportunity before in the history of Pakistan. So this is a unique moment where once we move cashless, once all these platforms essentially have 70% of the population that's young come online, everything is going to be traceable. Economic activity will be tracked and basically logged in real time, right, in terms of GDP growth rate. So I'm bullish for very fundamental reasons, because I think the technology shift is actually very beneficial for Pakistan. And money will come. Just focus, study, work hard, try to build value, and people will invest eventually.
Absolutely. Thank you so much, Faisal. And thank you to all the panelists for a very uplifting panel, I think, in this time when a lot of people are feeling very low, very depressed, and the startup ecosystem, a lot of people are really hurting because they're cash strapped and people are fearing this liquidity crunch. I think today's panel for me personally was super uplifting, really high energy. I really enjoyed speaking to all of you. And I agree with you on all the opportunities that you've identified. For us at Karavan, actually during this lockdown, we've made 2 new investments, which has been fantastic, right? So there's a lot of silver linings that were discussed today, and I hope that all the people who are listening in also walk away just like me, feeling uplifted and feeling a little bit happier about the situation we're in. Khailee, I love your background, which is now a lot of animals, which is great. Thank you so much once again. If anybody has any last thoughts, we'll hear them now. I also want to thank all our partners, all the intermediaries who were completely, on the same page, helping this panel get to as many people as it did, and to NIC Islamabad for managing all of this, for managing the technology, for managing the outreach for us. And thank you so much, Faisal, for reaching out to a lot of the great panelists that we have with us today, and for making this happen. So I'm going to stop right there, and I'm going to let Fasi take over and kind of sign off here. Thank you.
Thank you so much, Meenah. And thank you so much, everyone. It's been such an interactive session. I'm really happy that we had like so many question and answers. And Khailee has amazing energy, really loved it. You went on to answer most of them. Thank you so much. In case all of the other panelists would like to see the questions that were raised, some of you were tagged in it, some of them were directed specifically at you. Khailee has been very generous enough in answering almost all of them. Please do look them up. I would appreciate if you guys are open in sharing your email addresses that I can share with the participants and attendees as well. And if that is so, with your consent, we'll do that. I believe it was a very, very interactive discussion. And thank you so much for your valuable insights. Any last words from your side, Zuhair, before we close this?
Thank you, Fasi, and thank you all of the panelists and Meenah for pulling all of this together. Faisal, thank you for coming up with the fantastic idea in the first place. I think it's been a great discussion. All of you have said things which I particularly agree with. I'll leave you with one last thought, not just the VCs, but also the founders. I went into the mobile industry about 30 years ago and spent a lot of that time going into markets which everybody else was going out of. And Pakistan was one of them, Egypt and Tunisia and Algeria, Iraq, just before the invasion. And all I know is that the shareholders that I represented at the time, their philosophy was that if everybody's going that way, you head the other way. And sometimes that makes the best possible success stories. So I'll leave you with that thought, and good evening to everybody, and good afternoon to those who are still in that part of the world. Thank you so much.
Thank you.
Thank you, everyone. That's a wrap. This recorded conversation would also be posted on YouTube and LinkedIn as well. We'll tag you all so that you can watch it later and also share in your networks. Thank you so much.
Bye.
Have a great day. Bye-bye.
Thank you.